Is the point of the 30 seconds to summarize or introduce the topic as a whole, or is it just that we start and then...
The point of the 30 seconds is to grab attention.
I could just kill Will.
Why do you think... Gentlemen, we got it.
Will!
Who are you?
You know who I am.
That's true.
And why is Marc going to kill you?
This is Will Bednarz.
It's Bednarz.
Bednarz.
You've known him for this long.
Bednarz?
Bednarz, yeah.
You say put the accent on the bed and then the nurse?
Yeah.
This is a great time to learn that. Hi, Will.
Will, you hail from a magical land called Wall Street. Well, first from a magical land called San Francisco.
Yeah, both are magical.
Speaking to the mic.
Well, you have to ask me a question.
Okay.
If you're from
That's a
Wall-
command.
If you're from Wall
Yeah.
Street, what are you doing here?
If I'm from Wall Street, what am I doing here? Well, I quit my job. I was an investment banker for a year, so not too long, but enough for me to realize that it was just a very perverse environment and situation. And so, this coincided with me converting to Catholicism.
What are the chances?
Yeah.
Which came first, the desire to become Catholic or the desire to not be an investment banker?
Well, the desire to be Catholic, obviously.
Gotcha.
Yeah.
And then the desire not to be an investment banker followed. Being an investment banker, it's kind of a glorious situation. You make a lot of money, you have a lot of power, people respect you.
That's why I podcast.
Right.
Sorry. It's not true.
But yeah, and I was reading New Polity while I was an investment banker, believe it or not, and was just fascinated with what you guys were doing, and then just reached out and got hired, and I live with Jacob now, as you know, not gay. And yeah, that's why I'm here.
Well, I think it's an important topic that we're talking about today. It's on the stock market, particularly for those of you who don't know what an investment banker is and how it pertains to the world of publicly traded companies. Could you give us a quick breakdown on that?
Sure. As an investment banker, you're essentially a middleman directing transactions between parties. And I worked for a private investment bank, so we only did M&A transactions. So
you're like a professional shopper, in other words. You go into Nordstrom or Macy's and somebody helps you
like a retailer, because the shopper's the one who actually
Okay,
purchases
there you
it.
go. Yeah.
But we make the sales, right?
Yeah.
So you can do a lot of different transactions, like raising debt for a company or going public, like IPO, which we'll talk about today. But my bank only focused on when a bigger company was going to purchase a smaller company to grow their business.
And particularly a public company buying a private company.
Yeah, for the most part. But sometimes you would have two private companies working together. But yeah, typically that's how it works, because you need a lot of money in cash to be able to purchase another company. So typically that comes through by being publicly traded.
Yeah. So we want to talk about the stock market today.
Yeah.
I think that one day a pope will condemn the stock market.
Yeah. 4 years and counting. There'll be an encyclical. It'll be either from Pope Francis, or Pope Francis will have just died, and the first encyclical of the next pope will come out. And in it'll be called, in Latin, of course. The first two words will be like
Contra negotiatium.
Contrary to popular belief. That'll be the title of the encyclical, and then it will go on to say, the stock market is no good.
Do you know what the stock market is in Latin?
No. Do you?
No, I don't.
Can we make it up?
We can make it up, sure. I don't know what a stock would be. Because one of the things that we know from the Middle Ages is that there was no difference between a partner and a shareholder.
Yeah.
Edwin Hunt was a dude who wrote about this. In our last podcast, we talked about investing. We talked about the Societas. St. Thomas explicitly references this in his Summa.
Let's not presume that everyone's watching.
Yeah, okay.
What is a societas?
Yeah, Societas is a word in Latin that means something like a community engaged in a joint activity. It was used to describe a husband and a wife, their marriage, and particularly the marital act as well. In some cases, that was a euphemism that was used. But when it was also a technical term to describe a certain type of partnership between an investor and a merchant. The investor giving the money to a merchant to go down to Portugal to buy wine, to bring it back. And we're taught by a number of historians who say that the investor was never or very seldom a sleeping partner. He was really activated and engaged, invested spiritually in the endeavor, because what they're bringing back was something that the community needed.
And the reason that we want to start with talking about the societas is I think a lot of the times when you hear a critique of a modern institution, it's very difficult because it's all we know, right? Our presumption is that there's always been a stock market. We were born into a stock market. It doesn't really seem like something one like invents and then does. It seems like something that's always been around, or at least the capacity for it was always around. When you point to the societas, what we're pointing to is that within Christendom, so that is to say within a world in which Christianity was considered to be true by a whole bunch of people, within this world, there was a way of doing investment. And there was a way of being a merchant, even. But that it didn't ever occur within this world to do it the way we do it now, which is to say through a stock market, a secondary market. So it's just important to say, like, we come from somewhere. We have a history. We are a post-Christian people. So part of what we want to do in Good Money generally is look at what did a Christian people do, acknowledging that doesn't mean they're without sin, that doesn't mean they're perfect, that doesn't mean they're smart. It just means they're more perfect, less sin, smarter. Right? But acknowledging that, right, then we want to focus in on what they had to be able to show the change. I think that's important because sometimes the way people talk, they speak in this like ahistorical vacuum. Like, is it good to have a stock market or not? And it's like, well, what went before? And that's what we're trying. I just want to. I'm playing the dummy on this one because I am.
Well, that is what came before, and there's this slow transition to what we came to now, and we won't track the whole thing, but
there was the case. It was the case that the societas was limited in time, right?
Yeah, so it had a definite goal in mind. It was bring back wine. Yep. That's the goal,
And if you had gotten the wine, you'd sold the wine, your societas had done it, and I came up to you and said, "Hey, I'd like to invest in your societas," you'd be like, "What societas?"
Yeah,
because it's already done. Correct?
Yeah,
okay.
It's just described our decision together to do something. You know, no, right after St. Thomas died, in the very late 13th century, there was a development in the way that investments happened, and that was the invention of a company. But again, a company that we wouldn't recognize today. These companies were, again, decisions that people would make to bind together for particular ventures, for particular ends, particular goals. But they just continually did business together for a very long time. And whatever amount that you put in to the business, into that particular endeavor, was you got a prorated share out of it based upon both your capital input and your labor input. As far as like Edwin Hunt is concerned, who did a major study on the Peruzzi company, the development, one of the earliest companies in this new development, he couldn't tell a difference between, or he thought that everybody, as far as he could track down, actually worked. All the investors were actually workers in the company.
And I think he also said that they, despite, you're right, this difference in that it wasn't one single merchant voyage that was being funded, they still had a limited scope. They would do things together, but he said between 2 and 12 years was the lifespan, I think, of these.
And I don't think that was set in law. I think that was just kind of inevitably like how the relationships went. It's like sometimes they lasted a couple of years, and sometimes they lasted 12 years. But the development that we're talking about, from the societas to the company to this medieval company, was that there was just an agreement that you were going to work together as societas after societas after societas for a number of years, for a longer period of time. But the biggest thing to recognize in this is that there's no difference between a partner and a shareholder. This is the way that he and others have summarized the company. Is that if you... Whoa, dude, come on.
Doing this. Not used to you here, Will. Sorry, for those on the podcast, I just keep on elbowing our guest's microphone.
It's not very cordial.
Carry on.
So the development that we see in the stock market, and really the development into the stock market is where there is the separation. Somebody can own a part of a company as a legal entity. So whereas the societas clearly referred to people working together, and us, a company in the modern term of that word, not the medieval use of the term, but the modern term describes an it. It describes a legal entity. It's an us versus an it. And you can own a part of an it just like you can own any other it. Like I own this chair, I own this table, I own this microphone, whatever it is. But we don't always recognize what that it truly is, not juridically and legally, but actually and metaphysically.
Yeah, so you go from the societas, where all the members know that they're doing one thing together, and then you go to the company, in which you're doing several things together over a period of time. But still, everyone's working involved, and then you get this.
And even like putting in money to accomplish each venture as well. So you first got wine,
like
now you
but only the workers are putting in money.
That's right.
There's no tractor sitting back.
Yep, that's right.
Or Stans
sitting back. Yeah.
So there's no just people. What I think you're both saying is that there's no people who are in it just for the money without labor.
Right.
There's no kind of ownership that's simply legal and juridical. It's always the kind of ownership that comes with the fact that you are involved. You're working.
In these early stages. Yeah.
So give an analogy for the folks back home. It's like in the societas, you had a marriage. In the company, the medieval company, you had multiple wives, but not at the same time. Just after the death of each wife, you got remarried. All licit, all well within the tradition. But then this third thing comes along, starts to break that commandment, I'm thinking of the Deuteronomical, of course. You cannot amass wives for yourself, where the real first example of this, as I understand it, is the East India Trading Company.
Oh, I thought you were going to say the Pharisees.
The British. 1602, the British East India.
British East India, or is it the Dutch?
I think it was the Dutch.
Is it?
Yeah,
we wrote about this at one point, but it's the Dutch.
It's the Dutch.
Yeah.
I don't know.
It has to be because this is obviously reeks of Protestantism.
Yeah.
I guess the Brits would have been. 1602. So a new company arises within this field of people doing essentially what we would look at and say, that's a illicit way to do business. That all makes sense. Obviously, prone to corruption, prone to sin in various ways, but not like something that implicitly makes you shudder and say something's unnatural here. But then, East India Trading Company, which I associate largely with the Pirates of the Caribbean as like the bad guys.
Yep.
Not the pirates, to be clear.
No, they're
Pirates
the good
guys. They come on the scene, and they do what different? How do they end the medieval era for finance?
Well, there is a number of things. The company that they were forming, they wanted to actually have a longer life, something that was going to be stable and always dependable. And the way that they were doing that is by amassing the profits of each venture for to reinvest in the company itself. And they're saying, whoa, this is going to take me forever to get any profits out of my investment.
So investors are not seeing the return on the investment in the profits each time the wine goes to market. Rather, the company is taking the profits they make and it goes back to the company, which presumably was like because the New World has been discovered, right, at this point, or they're bigger journeys,
or an old world on the other side. Yeah.
Exactly.
Okay. And so there was a 10-year period.
10 years.
That you had to wait before you were going to get your first dividend. Okay, well, dang, that's a long time. What if I want the money now? And so people started to trade their share in the company with other people. So it's the development of the first secondary market post-Christianity. So things like this, existed at one point.
I give East India Trading Company my money. They go get spices, etc. But they don't give me a share in the profit of the sale of those things. I have to wait 10 years before I'm going to see anything back.
Yep.
I'm thinking, hey, I got to send my kids to 1602 college right now. So I sell my share to Will for a profit, though, right?
That's right.
I have to.
Let's say you had 10 units and you sell it to me for 12 units.
I sell it for 12 units because I'm trying to make money here.
Yeah.
Not lose it. Yeah. Okay, and this is new. Because I think I recall in our research in the Societas, you could sell your position in a Societas, so that original format, but what it meant was that you then began the work. So you're quite literally joining the society. So, for instance, you send me off to Portugal, okay, but then something comes up where you can't wait around for me to get back to Portugal. Sell it to another guy.
No, this never happened. I was trying to give
okay.
this to you as an example,
Oh,
trying to
okay.
describe how it worked. Yeah,
Okay.
sorry for that confusion. Yeah, no, this is an occasion where it's called a secondary market because your money never actually goes to the company that you're investing in.
Right.
Okay, so it's not like the Mona Lisa boat needs to head off to India to grab those spices, and some guy wants to pull out his money. It's not like they send a pigeon over to get his shekels and bring them back, and you send a different pigeon over to return those shekels. No, it's just I'm buying Will's ownership spot from him, and it happened really quick, 6% increase on the initial share price, and so people were starting to speculate on the ownership of the share prices because they were already making a quicker profit than what they would later get 10 years down the line. Now, the East India Company realized that 10 years wasn't going to work, and there's a whole history that develops there. But it is the emergence of the secondary market as a standardized mode of selling ownership in a company. And that develops and develops and develops into what we have today. But we could keep tracking those developments, those historical developments, but the really important principles, the actual conceptual changes happened at that moment.
Yeah.
The us turns into an it.
Yep.
The ownership stops being metaphysical, stops being relational, and it starts being legal.
Has no basis in labor.
Yeah.
But I think people will ask, why would I pay him 12 units for a share that's worth 10 units?
It's really a time preference of money, I think, is the difference.
What does that mean?
You want to answer that?
You got it.
Okay.
Well, I mean, the concept is that money, it's kind of this advent of an opportunity cost where you always have an applicable use of money, a way to spend it or invest it to make more money off of it. So I'd rather have $10 now than $10 a year from now because I can turn that $10 into $15 in that time, right?
Yeah.
So that's the concept of time value of money.
And is it the case that precisely because you could sell your shares, you could also presume that the price of the share would go up for you as well? So what I mean to say, are you just saying, because it seems like a basic truism to simply say like, well, I'll sell this now because I have some other idea of how to use the money to make more money, so it has an opportunity cost. But it seems to my mind that it would be more logical to say, hey, if this just went up 6%, I'm going to buy it from this guy because I've still got 10 years for this thing to grow, so I can sell it to the next guy for more. Like the money itself appears to be increasing, the shares themselves seem to be increasing in value over time.
Oh yeah, they are. But that's just due to pure speculation and the ability to resell it.
Right.
And I guess the buyer ultimately thinks that profit that comes to them ultimately will be more than what the share was originally worth.
Totally. I mean, all I'm saying is you wouldn't buy it for yourself unless you thought it would go up for yourself.
Right.
Everyone's still trying to buy low and sell high.
But it's an interesting phenomenon, and this is how we'll get into it later, how the stock market works, is that, just it really does go up because there is that desire of other people to purchase it from you.
Totally.
It's all just the demand of the stock or the share.
It's why I think what really freaked me out about the whole thing is like, how is this any different than an NFT? Like what I mean is, functionally speaking, as long as someone will buy it, it has value.
Exactly.
Like its value is the fact that the other person's going to buy it.
Right.
For me, that sent the alarm bell, and maybe I'm just like scrupulous or something. But it immediately became worrisome to me to invest in stocks if I'm entering into a system where the value of the thing most fundamentally is just related to how much I can pawn it on another person for.
Right.
Like that's what's producing it. It's like, well, why not just make this thing an imaginary JPEG? Which is what NFTs did. Right?
I mean, it is rooted in somewhat of reality, though, because you are receiving dividends that aren't pertaining to profit necessarily.
Let's talk a little bit about that, because I think we're going to inevitably get to all of my very emotional responses to the stock market. It's like the stock market personally did me some injury, but that's not true. I just found out about a year ago. I mean, it ruined the world, I suppose, but yeah, that's whatever. Lots of things do that. I think it's worth pointing out, right, since we're still in the kind of historical phase of this argument, it's like one of the things I've heard many people say is that, you still have, well, let me back up once more. Profit sharing. This is what characterized the societas, right? At the end of the day, you sell the wine at the market, and then there's some division arbitrarily decided between the stans and the traktor, where maybe it's not arbitrary, maybe it's according to law.
Set. Yeah, it was set in law at that time.
Oh, okay.
We can chat about that a different
So it's
time.
set in law, but you divide the profits. All right, and this is basically the presumption which Catholic social teaching has had from the very beginning, that to those who work shall go the profits. And so since everyone's working in some sense or another, the profits are being shared. Okay. Now, what's important about this is that it shows the kind of personal nature of the societas, which is that you don't simply share in the profits, you also share in the potential loss, right?
Absolutely right, yeah.
And with the Dutch East India Trading Company, with the advent of the secondary market, you had, at least in perception, and to a large part true, the ability to only share in profit in the sense of a kind of guaranteed gain, right? Because if I give my money to the trading company, it doesn't at first really matter if they fold or not, if I'm making my money on the basis of selling it to someone else, right? So I have, for an individual, it's not risk-free, but a much less risky investment. Is that fair
you
to
got
say?
it now out in a sense.
Right, because I can sell it to the other guy. And I might know, oh yeah, it's going to fold. He's never going to see his money, right? But what do I care? I'm going to make the money on him, not on the company.
Yeah.
So you have this change, right? And you also have this introduction of I think I would call it the dividend proper. Because sometimes we say dividend and we just mean a share in the profits. But at least at this point in history, it changed a little bit. Well, actually a lot. Because instead of it being a dividend being a share of the profits where the thing is sold, the work is done, and the profits are divided between the workers, the dividend that you got for owning the stock was sort of arbitrarily decided by the company. So the company says, okay, and this is true, I think, stop me if I'm wrong, I think it's still true today. So the company decides, the executives, I presume, of the company decide, okay, we're going to give all our shareholders this much.
Yeah.
Okay.
Per share, it's
Per share. But why this much and not that much? There's no reason, as far as I understand.
Yeah.
It's not like we're looking at profits and we got to give everyone, there's 10 people, so each person gets 10%. It's nothing like that. They're just deciding how much they can afford to offer to keep shareholders happy, to keep them investing, to keep the value of the stock up.
But to be fair, I mean, it vaguely tracks their profitability. So if they have a really profitable year, they'll say, okay, our dividends are going to go up from $1 per share to $1.25 per share.
So,
but it's not proportional,
right,
which
right,
is your
right.
point.
Yeah. So tracking in the sense of, if they're doing more successfully, they can reward people with bigger dividends. But, there's a reason why dividends are sort of, as I understand it, they're not like a big gain. Like, even if the company does well, you're going to maybe get a little more, but not like a lot more. Because they're not...
Wouldn't have to be decided on and elected the next year.
Right.
It's, I mean, in a real sense, because the dividends are decided upon prior to the engagement of this next, financial year.
Yeah.
Then it is something that does not essentially connect to profits.
Right.
Yeah.
Right.
And oftentimes they're paid out of savings.
Right.
Yeah, and another point, which is interesting, is that most companies will give the option to reinvest dividends, and so that's just another way to artificially inflate share prices, because that extra cash will just go into the share price.
But let's back up from all this.
Woo!
That was
Well, I thought it was funny because the Dutch East India Trading Company is giving dividends in kind. They're giving actual shipments of spices, cinnamon or something,
because they didn't want to part with the cash. Yeah. Those early years, yeah.
But what I want to be clear before we move on is the way in which this new thing, this secondary market, is parasitic upon the old thing, because you have a form of life, a form of investing, a form of doing, being a merchant, that had been accepted as part of the tradition. It had its, people understood it. So that when you introduce this new thing, it's not simply like blasting out the societas out of the water. Rather, it's very subtly, like almost like taking the center out of the societas, but keeping the exterior, so that the transition can be made. What I mean is, dividends feel like sharing in the profits, right? Like the ability to take my share and trade it for cash feels like the end of a venture. It feels like a risk that's rewarded, but it's not, right? A company feels like a particular work, but it's not. I mean, this is the point, is that the East India Trading Company could actually be doing anything out there and you don't need to know. It's not like you're getting around saying, well, what should we do? Let's do this. Okay, they're going to go do it. We're going to get the wine. Here's the wine. We sell it. It's like, we're going to give our money to these guys, and sure hope they're not starting wars out there.
Or the ship could have sunk by now.
Well, right, exactly.
We're still trading the stock.
But we're all trading the stock, right? There could be no company, which is, I think, where a lot of this stock market is now, is that we're all just trading fake. Like, there's no real value being produced. That's what an NFT is. Yeah. But, like, historically speaking, unless Pirates of the Caribbean got it really wrong, they were starting wars. So anyways.
You know, that's a pretty good source. There's a lot of other really thick history books we could mention and cite, but I think that's good enough. This
is how I feel. If it's like, okay, well, if they went through all the effort to make this big budget movie, I'm sure they checked their facts. Right. I'm not about to fact check Johnny Depp and company.
That's hilarious.
Okay, but it's a different relationship. But all I want to point out is that, like so many things in the transition from Christendom to modernity, right? It's not just like the Protestants come and hack everything. Well, they do that sometimes. But it's not just this immediate shift. It's that things that feel like the old ways are put in place. And I think this is really hard, because even today, when people defend the stock market, they talk about things that no longer exist. They say things like, well, I own stock, and that gives me ownership in the company, and don't we all want to be owners and so have an influence on companies and things like that? And it's like, bro, you don't own anything and you have no influence at all. But it feels like it rides on, and this is simply to say something good about humanity. We're not so wicked that you can just do a completely unreal system of gaining.
Well, let's I really want to get into that and slowly so people can understand, but I think the only reason why the system of the stock market works is because humanity is good. You know, because there's a lot of people of goodwill. We struggle with totally abstracting ourselves from reality.
That is true.
Yeah, and and so there is some. We'll get into some of the problems of the mechanisms of the stock market here. But just kind of starting.
I'm pumped.
This.
I'm excited.
So let's do it.
I want to go fast. But
okay,
you're right.
Let's do it. Okay, so first of all, we've already mentioned this word speculation. Speculation is a technical term. It means buying something with the hope and the anticipation that its value in the market will rise. There is no desire to use the thing that you are buying. There is no desire to work with it. There's no desire to develop it in any way. It is purely a decision to purchase based upon an idea or a real insight that its value will increase in the future.
So is that allowed? Can we do that?
No, you can't do that, dude.
Really?
Come on.
Here comes the softball. Can we speculate?
We can't speculate.
Not on the basis of that definition.
No, you know what? And I don't have all these citations out. You can bring it up on the economic database, but we'll just have Josiah throw it up on the screen. All the citations. There it is.
Of what? On speculation?
On speculation. Yeah. But
I think it's important though to right away. There's a misunderstanding of the term that is just part of the. There's equivocal uses of language. And usually when we use speculation in English, we tend to mean something that really doesn't apply here, which is we tend to talk about risk. So, I speculate that something's going to be really valuable, and this means that it's risky because it might not turn out to be valuable. And then the assertion has been made that that's what makes speculation wrong, as if buying low, doing no labor to something, and selling it high is only a problem insofar as it's somehow risky behavior akin to gambling or to just imprudence. But what you're arguing, and I think is borne out in the Christian tradition, is that, there's a critique of imprudence, there's a critique of gambling within the Christian tradition, but it's simply not the same thing as speculation, that these are two distinct phenomena, both bad in their own way, but speculation isn't bad because you're doing it with your life savings or whatever, as opposed to $5.
Right.
Okay.
Yeah, that's a great point. I think there's actually a historical reason why we have that equivocation in the term.
Yeah.
Speculation has always been a bad term. Nobody has ever liked it. It's like saying like prostitution or something like that. Maybe even, I'm not sure if people like prostitution these days or that word, but it's you have to constantly change the definition of what that word refers to so as to make us feel okay with what we're doing. Okay,
Yeah.
so
Should I just read the quote from the Catechism
Do it.
of what it is?
sure.
Okay.
Wait, which quote is this?
From 2409.
No, that's not the right definition, because that's in the Latin, it's not speculation.
Oh, so it's okay.
Yeah, so that's not the right term. No, in the Latin, it's just a business decision, and that's why it needs to be changed later on. I think the closest we're really looking for the idea, but anyways, let's just jump back to the prior. Speculation was considered bad because it was just people buying low, selling high, with the intention of doing no work to it, and that wasn't cool. That means that you're increasing your power, how much money you have, without any corresponding gift to society. So you're getting without giving, and that's just not cool, bro. So that was why people didn't like it.
Sure.
But then a lot of people started to speculate. The stock market was kind of opened up for more people to enter into it. There's quite a number of reasons why they do that. Retirement accounts is really probably the biggest reason why that's why the expansion occurred. And so we kind of had to change the definition of it. If we were all engaging in prostitution,
Sure.
bad word, then we have to change the definition
It's just
of
sex
what
work,
it means.
baby.
Yeah.
Just logging in to do some work.
Yeah.
Yeah, and I think you actually track this through, especially the last 200 or 300 years, how as speculation as an activity moves down from class to class, it becomes licit, more and more licit. So what I mean is, when it was an activity of the wealthy, like the kind of barons of the world, then you had people that are still middle class and even upper class critiquing it as being undignified and horrible. So you think about Charles Dickens, for instance. Charles Dickens thought share ownership was perverse and was used to oppress everyone beneath those who were trading in shares. But then you have it opening up so that now the middle class itself is no longer watching the wealthy speculate. Now the middle class is engaged in speculation, and in a typical middle class way, which is that the middle class isn't there engaging in speculation to sort of try and control the world, to increase their power. They're doing it out of that kind of middling desire for security. So it's the 401k, it's retirement, it's that sort of thing. And so then it becomes increasingly valued because the middle class, especially in America, is simply a sign of what's normal. And when you live in a society that's detached from its conscience, then you simply look around to see what most people are doing. And if they're doing it, it's probably moral. So the moment that the middle class is doing it, just in America, de facto, it's fine. And now you're seeing even a further development, right, where now there's like a moral imperative to invest. And that's moving down from the middle class to the lower classes. Because now it's being construed as, well, if it's all open to us, if we can all invest on our phones, now the lower class should have some piece of the pie, right? So now it's precisely, you can see it becoming a wicked thing that very few people are doing, to a normal thing that most people are doing, now to an actually morally good thing, where it's like, if you're not investing, you're losing out. If you don't invest, you're an idiot. If you're not like getting in on Bitcoin now, you're never going to be wealthy later. That sort of thing. It's part of the like. Does that make sense? I just wanted to give like a class history of why.
Yeah, that totally does.
How this happens.
Yeah,
and it
so-
was the same with like sexual immorality. Like you had the normalization of contraception and abortion within aristocratic classes, like post-French Revolution. It wasn't until these things, but they were still like wicked things. It's just that they became part of the critique of the wealthy classes, like see how perverse our wealthy are, how poor they are at leading us. But then once it became accepted in the middle class, right, then it's basically normal, and then it gets pushed to the lower class where it devastates them, and that's just how it.
Yeah. Well, bummer.
Yeah, now I'm sad for other reasons though. Okay, so there it is. Normal. So when people say speculate, though, they are dealing with a word that has been equivocated.
Yeah, but really, what it comes down to is that, are you doing this one act?
Are you buying low, and sell in high, with no intention of labor or use.
Yeah, this is what John Paul II says to this. He says, the ownership of the means of production becomes illegitimate when it is not utilized or when it serves to impede the work of others in an effort to gain a profit which is not the result of the overall expansion of work and the wealth of society, but rather is the result of speculation. Ownership of this kind has no justification. It represents an abuse in the sight of God and of man. That's just the term that we later, give to speculation. There is actually a technical term there, unlike what's used in the Catechism, which refers to, which actually goes back to a medieval condemnation of this idea that's speculation. That is the buying low, no intention of doing anything with it, selling high later.
Yeah, see, that's just fascinating because in that category, it sounds like the Pope is placing speculation alongside sodomy, historically speaking.
Mm-hmm.
Like a sin that when you think about like depriving what are the sins that cry out to heaven for vengeance? There's sodomy, but there's also depriving the worker of his wages, right? So depriving labor of its share in profits.
Mm-hmm.
I think you could expand it to there. But it also has all of these qualities have something unnatural about them. The speculation has this changes the way we are in touch with reality because it says, well, I can gain, I can get without giving.
Mm-hmm.
I can have more by working less.
Mm-hmm.
I can not do and yet see fruits.
Mm-hmm.
And this is one of those, the reason it's condemned so strongly is because it's a false relation to reality that allows us to ignore and not see what systems of oppression are actually producing the fruits. Like what things are actually making the thing more valuable that you can't see.
Yeah, none of us think about this. Like, when I was trading, it was just like the numbers are going up in my brokerage account. Great, it's like if I, click here and press there, then I got an increase. I don't think about like actually the mechanisms of how it's happening. I just realize that they are, or see that they are,
right. And I think it's important to note how qualitatively different it is from gambling, because I know some people try to equate those two, right?
Mm-hmm.
And it's that, our labor is how we do effectuate our, anthropological point that we are made in the image and likeness of God. And so to pervert that through speculation, take advantage of someone else's labor, so like that anthropological point of themselves, and to use it for our own gain is just such an abusive act towards humanity. While gambling is more just for pleasure, right? And something that is not necessarily an assertion of one's position in the cosmic hierarchy.
Yeah, which is why you can see that the church is like, you can gamble.
Right.
You can gamble a little, basically.
Yeah.
But they never say you can speculate a little.
Right, exactly.
Yeah, they never say that. And in fact, like if you just have a society that's full of gambling, well, we know what that is. That's Las Vegas. And that's just like a synecdoche for like evil, perverse society now. It's like none of us want to live in Las Vegas. Sorry if you live in Las Vegas.
But then at that point, if you are living in Las Vegas, it's almost like that type of gambling takes on a way of labor for them. Like that's how some people make their living. So then it does become perverse.
Yeah, exactly. Right. It's a land that's only ever defined by that one act. Right.
Yeah.
There you go. No, but this is a huge predicament because it gets away from the real call for justice and actually unity with other people in an economy.
Okay.
Which Benedict XVI actually said, it's not even good enough to have an economy that operates by commutative justice. That's the justice that looks at products instead of people, that tries to compare values of the product with an objective understanding of its value, but rather a point of distributed justice where you're looking at the other person and saying, how can I proportionally aid you and serve you relative to where I am in my standing of society? I mean, this is a huge point that he makes in Caritas and Veritate, Pope Benedict XVI, that is. Mm-hmm. Well, if we're not even meeting the criteria of commutative justice, how much further are we from that point of giving a gift to that distributive justice that the Pope demands us to adhere to?
Yeah.
Speculation doesn't even meet the first, because there's no equal exchange of what's going on. And people might say there is, insofar as like, well, somebody considered it worthwhile more. But that's not what defines a true gift to another. That's just because someone's opinionated in that way. I mean, the Catechism condemns that too, you know?
Well,
So,
you're drawing a comparison, I think, to the idea of establishing a contract, like a contract not being justified on the basis of everyone agreeing to it, but on what it actually enacts between the people.
yes.
Yeah.
That's exactly right, you know? And the Catechism actually, I mean, do we have that pulled up here? We can...
It's
Do you want me to
definitely
read it off?
It's definitely in Rerum Novarum, right?
Well, it's definitely in Rerum Novarum. That's true. Do you know what paragraph it is?
No, but I just remember this meme where there's like a employer that's saying like $12 an hour. You agree? And the worker's like, I agree. And then the Pope is like popped up behind them and is like, isn't there someone you forgot to ask?
Yeah, I've seen that one.
It's a good one. I like that one a lot. Well, because basically the point is very clear, right? Like just because everyone agrees to it doesn't mean that it's good.
Right.
Yeah.
Like I can get a kid to agree to do almost anything. Like, hey kid, you want this shiny rock I found? Well, then you got to poison the weeds over there. You know, you'd be like, yeah, woo. Doesn't mean it's good.
Yeah, they're really concerned with the objective state of what's happening in the economy rather than just our opinion. Because as we see, people's opinions could be insane, right?
Yes.
Or people's positions could be taken advantage of. You know.
Okay, so let's just make sure we're all in the same spot. Trading stocks is an act of speculation.
That's right. It's the equivalent of like the what do you call that? The scalper at the football game. Right. You know, he goes out, he buys the ticket from the ticket booth, and he once all the tickets are sold, he goes out on the street and says, "Hey, I'll sell this to you for $200 now instead of the $100 that I bought it for."
Yeah.
Well, we might need to describe this more fully, I think.
But let me try. And but in this case, whomever he sells that ticket to, the next guy buys it and then just turns around and sells it again for more.
Yeah.
Or maybe less, you know. And nobody ends up ever going to the game in this example. So the analogy's a little bit rough. How's that?
Well, no, exactly, because they have no intent of going to the game. So it's same with, if you invest in a company, you have no intention that you're helping out the company because your dollars are actually going to some, business practice or opening up some new line of business, right? The money is solely going to the person where you purchase the stock from, and then I sell it and receive that cash. So the money's never, there's no intention of helping the company.
Yeah,
it's really just us, going back and forth.
Right, right.
And we should make the initial caveat, though, that in the initial public offering, so when a company decides to what's called go public, that is to say to start selling shares, to start selling stocks,
Right.
then when you buy stocks in this one-time situation, money does go directly to the company, right? And they can use that.
But there's a barrier to entry there. I think you need to have $500,000 in assets in a household to participate in an IPO. So the middle class really isn't doing that as much.
Yeah, I mean, it just seems like that it's the obvious point of reality that you need to have in order to have the unreality, right? Like at some point, it has to be worth it to a company that's just trying to do something to make a profit, right? It has to be worth it for them to suddenly say, "Hey, sell stocks with our name on it," right? Because they know they're not going to see any of that money because I sell the stock to Jacob sells to Will goes and sells it on the street, right? So that initial getting stocks at all is a moment of reality in the sense that you give them money, they can use the money, and you get a stock in exchange. But people talk about the stock market as if that were always the case, right? They say like, I'm investing in this company by buying this stock because I believe in what they're doing, etc. As if the company gets your money when it doesn't. Now, I think it's important to point out that because our world is the way it is, there are ways that a company can benefit from your buying of their stock. But at least in the initial point of the argument that I think we're at, it just needs to be really clear that these are all indirect ways.
Right. It doesn't help the business.
That's correct. Yeah.
Like the business practices, I mean.
Yeah.
It helps the shareholders.
Right.
And the board of directors who, have their stake in the company because of their ownership. So they care about the share price.
Okay, so maybe we could...
But we can go to that later.
Can we explain it nice and slowly? Because it seems important, right? Like, so you have a company, it wants to go public. What changes in the company? Like, what does a company that has stocks attached to it, how does it differ from a company that doesn't? What's the difference between a private and a public company?
Well, just, in simple terms, you have the partnership. So like, let's say we have a private company and we each own a third of it.
Yep.
And then we go public, and then maybe our amalgamated share goes down to like 10%, right?
Okay.
And so then the rest of 90% is owned by, whoever wants to buy into the IPO or the initial public offering.
And these are the people that are largely the wealthy because they need this.
They're
Right.
exclusively the wealthy,
Okay.
actually.
Yeah.
Okay.
Mm-hmm.
And then the poor man can, start speculating if he wants at some point.
Oh, I see. So yeah. Because I've heard this argument too, that it's stock ownership isn't quite the same as getting a share in the profits, but it has this great benefit that you can be a part of this group that makes decisions, these shareholder groups that make
Right.
decisions about the company. But this is largely untrue.
Oh yeah, I mean, you have to have at least 10% share of the company in order to drive any sort of change, right, or have a voice.
Yeah, in a way, I mean, it does seem kind of perverse because it seems to enforce rule by the rich, in the sense that, and I'm not even talking about, I'm not saying it's bad to be rich. I'm just saying that at least within the creation of a company, it's like, well, we three people could be anyone, and we could be doing that good old conservative thing, using our pluck and our know-how and making a company that really takes off, right? And make a bunch of money. And that's exciting. But when you go public, it's like, it's quite literally an offering. You're like, here, people that can afford it, now you guys decide what the company does next.
Right.
And that seems to be across the board what happens, right?
Yeah, and then we get rich because our share of the company goes up, right? So that's our
So instead of
That's our
us getting
inclination towards it.
profits, we simply also get
a share,
stocks
right?
that we can sell to other people
Exactly.
for money. It's wild. I mean, this is wild to me. I mean, we talk about like this is super normal. This is actually insane. It's like the company no longer matters. Like it doesn't. All right. So now there's a board of directors,
Right.
and these are all the shareholders,
And they're the ones who make the decision.
and they make a decision about what the company should do.
Right.
But now their guiding light is the value of their stocks. That is,
Right.
how much can I sell the stocks to the next guy?
So all they care about is the perception of the company. That's the upshot of it, right?
Well,
Rather
the
than-
first thing that they care about is that stock price is always going to go up.
Right. But it will go up
Yeah.
by a good perception. So it doesn't matter if you're profitable.
To make it really clear, it
Right.
goes up because somebody else
Wants
perceives the company, perceives the stock as going up,
Yeah.
and therefore wants to buy it.
Yeah. So there's demand for the stock.
So what I'm saying is the company actually gets abstracted from its particular work, right? And this might seem like a neat or a kind of fine metaphysical point, but it can do anything so long as what it does increases the perception, increases the value of the stock in the perception of the person that might buy the stock.
Right.
So I could be, we could have what should our business be together?
I really wanted to make fried chicken tacos.
So we could, all right,
Yeah.
so we get into it. We're going to do fried chicken tacos. Then we go public. We think this is really going to be a great idea for us. We're making more money, and now we have 90% of our company owned by shareholders, and they say, hey, you know what's really going to increase is if your chicken tacos get into,
Walmart.
yeah, or like, I don't know. It could just be, it could technically be completely arbitrary. Like, let's
Or
make
if a woman,
microchips.
or if you run an ad with
Oh,
a
I
woman
see
in a
what you're
bikini eating the taco, that could help, right?
Right, but the point is that it has no intrinsic. The profits are
exactly.
no longer intrinsically connected to tacos.
No.
They are now only extrinsically connected to tacos. That is to say, insofar as the production of tacos continues that good perception, then yeah, let's keep making tacos. But if they don't, let's ditch the tacos and do something else. So it's like the most extreme possible version of where we came from. So the societas is limited by its particular goal. The company has multiple goals. The East India Trading Company, it's like, well, it's the company, but we're pretty sure they're out there trading. And now it's like they could literally do anything. As long as, and I think you actually see this, like what is that Tesla company? Like, what do they do? Like, there's cars, but it's also like anything Elon Musk thinks of.
Yeah.
And every time he thinks
Getting to
of something,
Mars.
even if it's stupid, like a tunnel, he's like, I made tunnels. I'm gonna have cars that can go through the tunnels. Everyone's like, this is awesome, and the stock price increases. But he doesn't even need to actually deliver on this.
Yeah.
The tunnels are stupid. They just cause
But
traffic.
and they're also, it's worth noting, they're not profitable.
Yeah.
So they're losing money, and their share price is positive, and it keeps going up.
Well, there's no longer any intrinsic connection between actually doing something to make. I mean, this is crazy because I felt going into this whole sort of post-liberal vision, like, oh, well, I'm one of those guys that wags the finger about people who just want to make profits. But once you start critiquing the stock market, suddenly I'm like, can we at least please make profits? Can we at least be greedy and do stuff to make the world better, even though our motivation is only like scraping that dime off the top? Like, that sounds healthier and more sane than saying like, hey, let's be completely detached from the production of jobs, goods, services, anything real. Let's simply make a perceived value, however we want to make it, and exchange it for cash by selling it to suckers, selling it to the next guy.
Right. Well, I think there's a couple really important points here. One
Gets
of
me
them,
all worked up.
Yeah, but I think this gets back to an earlier point we made, is that I think the only reason why it does work, or is in many cases, I mean, Tesla is a great exception to this rule, as many companies are. But a lot of companies, their profitability does in some way move with its stock price, or rather its stock price moves with its real profitability. Yeah. Okay. And I think that's just the point, because we can't really escape the real. Like humans, we are attached to reality.
Right.
We're just grounded here because we're part of it. You know,
Yeah.
we can't actually just go by pure abstraction alone. We
Right.
can't.
At the end of the day, you have to make an evaluation for why you think that stock is going to go up, and one of the reasons why it's going to go up is going to be because people think the company is doing some good things, because that's what human beings, that's who we are. We're people that want good things. We want the world to be great. And so when we ask, well, how do I know this company is going to be valued by the next guy who I want to sell the stock to? Inevitably, we're going to say, well, is the company great? Is it doing great things? Are we all happy about the company? Is it producing? Is it making stuff? So it makes sense. But I think what makes it, but this is just what I said about this change from Christendom to modernity, right? Is that the things feel the same, but they're not the same, and that matters. It feels like all these companies are still, like, the reason that we get money from stocks is at the end of the day because companies succeed in doing real things in the world. It feels like that, but it's not that. There's a relation, sure, but the relation is extrinsic. Maybe Apple continues to make its market value, that is to say how much its stocks are worth, maybe it increases on the basis of Apple's actual production and giving of things to the world, of making things. Maybe it does, but maybe it doesn't. Right? The point is, Apple could increase its stocks just by taking 2 years to say they were going to make a new product that they never make. And during that time, you could benefit on it.
Yeah, I mean, the more common ways through share buybacks. So this is something that has really surged in the last 20 years in particular, where companies will take the profits that they did make and then buy their own stocks with it, thus forcing the demand for them up because there's fewer of them, and thus raising the share price.
Oh, because they buy their own stocks, and this makes it look like their stocks are increasing.
Yeah. So, for instance, Apple. You just mentioned Apple.
Yeah.
They, from 2015 to 2020, I think their profitability was exactly the same, pretty much. I mean, it just like did not change.
Yeah.
But their stock price quadrupled. What? So you really think that you're 4 times as great as you were 5 years ago, but you haven't changed what you're doing? You're the same company operating the same way, and that's fine. There's no judgment against like just doing the same thing. If you hit like what you're supposed to be doing, you've hit what you're supposed to be doing. I don't think they're a good company, but that's a different matter, you know.
Yeah.
What's really strange is that there is not that genuine correlation because they're committed to continual growth. That is the goal. That's the goal, is to always be able to expand. And really the truth of the matter is that as soon as you make that transition from private to public, you are making that commitment. You're selling your soul at that point to always being committed to growth. Yeah. If I own the bakery down the street, the downtown bakery over here, I'm happy selling my bagels in the morning, the cookies that are there. They don't have bagels in the morning. I'm just making that up. The cookies in the morning, really, that's their thing. And serving the community in that way, and then just the profits that are coming back, I'm happy that they have that. It provides for me, it provides for my employees, et cetera, et cetera. But that's not the case because the board as we've mentioned already, the only way that they are compensated, the board of directors are compensated, is by having that share price always increase, because they're not getting paid in the same way. So they always need that up. That means that their dedication is always to changing, to having a better perception, and to raising that share price.
So you're saying that
they never have enough. In
well, right.
words.
Well, like an equilibrium in profits is not beneficial to a increasing perception and value.
It's not beneficial to the board of directors and the shareholders.
Right. So, but doesn't this like, I mean, maybe this is all like super obvious to people, and I'm just like I feel like I woke up yesterday, and it's like the world makes sense to me now, because it seems to me like we live in a insane world in which we care about what rich people think and do, and we just sit and watch companies ruin the world. So I'm thinking of like Facebook doing Meta, doing obviously stupid things. And I've always just thought like, well, I guess just you make a certain amount of money and you just become kind of unhinged, and you start like, you're bored, so you start making new things and new acquisitions, and you're just so greedy that you have to buy every other competition. I guess monopoly is just like a desire in the human heart. I had all these like, what I think now are really false ideas about humanity, like that there's some kind of natural tendency to like a almost gluttonous greed. Like, I have to amass everything. I have to constantly be, and it's like, wait a minute. No, we have, maybe that's true to an extent. We have made an actual institution whereby the things that the lies that people say become true. Like the whole, if you're not growing, you're shrinking. If you're not winning, you're losing. That's one. It's like, yeah, that's enforced by virtue of going public. It's like, in a way, Facebook has to do, like, it has to grow. It has to expand.
It has to win.
It has to win, and it has to even make up its own territories in which to expand, like, into our minds. Like, it simply has to do more things.
Yeah.
And if it's not doing that, then it's not increasing in market value, which means that you're not able to sell its stocks. Mm-hmm. And it just seems like a way of institutionally hooking people to a machine that goes way beyond them, that will simply gobble everything up.
And F.A. Hayek says, it's one of the founders of the liberal thought movement, especially with free markets. He says that the market is something that is unintelligible and must be submitted to by the individual, and it's just beyond our comprehension. Yeah. But we must submit to it as it is a god in a sense, and that rings true with what you're saying. Like, no one really understands how the stock market works, I guess, because they would be questioning like we're questioning right now, right? All they care about is just perpetual growth, because as long as it keeps growing, then there's no need to question it, right? It's just a game of musical chairs at that point. Sure. But once the music stops, as it does, once a lifetime, perhaps, like a 2008 financial crisis or Great Depression. But outside of those, unique scenarios, it doesn't really matter the reality of it.
Yeah, it seems like the only way that you could justify the stock market in this sense is just that, well, I'm individually participating in something that's obviously destroying the world and rewarding avarice.
And actually, I think it's important to realize that the Catechism itself warns against this, because in order for speculation to occur, and perpetual speculation to occur, for that ticket to the football game to always circulate and no one ever just like going to the game, you have to have a lot of people wanting to buy and sell, and that means that you have to get more people in the market. No, the Catechism warns against. This is the 1996 Catechism, quoting the Roman Catechism or the Catechism out of the Council of Trent. And it says, merchants who desire scarcity and rising prices, who cannot bear, it warns against these people, who cannot bear to be the only ones buying and selling, so that they themselves can sell more dearly and buy more cheaply. And it's like that is something that the Catechism, that the church is warning us about. Don't be one of these people. You're just going to get robbed. It's a technical skill that others are better at than you. And I think a lot of people say, would think to respond to this and say, but I'm not sure I'm taking advantage of. I mean, I'm growing by 7% every year. I open up my account and I see that my total money is growing. But the question that really matters is, how does that purchasing power, the amount of money in your account, how does that relate to the things that we actually want? You know, how does it correspond to actually having real ownership, the ownership that John Paul II, you know, speaks about and commends, that the tradition tells us that we should search after and find?
Yeah.
How does it pertain to the stability of your family, the freedom of your family, your self-sufficiency? Like, how are you insured about your own security? Are you just calculating all the time? Are you worried because you're not in control of that number going up? You don't have technical knowledge of how they do it. Some people do. But your labor does not correspond to your wealth. Totally. And that is actually not just a matter of injustice. It's actually kind of the grounds for fear, because there's not the proper causal relationship that we have in this life. It's not like if I go and I sweat for a while and I work on something, that I know that there will be some sort of result for my labor, because I'm causing it. I'm digging the hole's getting deeper. Mm-hmm. You know, you don't have that with speculation. You know, it is this calculated game, and if you don't know how to do it, you're just looking at numbers, and you're starting to fear because your life is in somebody else's hands.
Yeah, no, and I think it does add to this generalized anxiety that seems to be characteristic of us, but it also, you know, it also just. There was a statistic that you read me earlier that was very shocking, and it goes to your point about the non-relation between having more money as a number and having purchasing power. And that was basically you looked at this period of great financialization, right? People getting in to speculation, especially through 401ks, so the middle class kind of entering into this. Mm-hmm. And you showed that in the same period...
I didn't do this. The National Bureau of Economic Research did this. Is that what you're talking about?
I thought... Okay, that's one of your nicknames, so I didn't know if... Okay, so what they pointed to was the fact that over that same time period, while we were making more money, right? Mm-hmm. So people had more numbers, they had more money. Businesses were producing less goods, and there were less jobs, mm-hmm. right? I mean, the financial sector is growing. That got a lot of jobs there now. But okay, so that can sound kind of like just some stats. But what does it actually mean? Well, it means that increasingly you live in a world in which you have more money and less things to buy, mm-hmm. in which you have more money but less quality to buy, mm-hmm. in which you have more money being made and less jobs.
Yeah.
So increasingly it describes this world, which is this sense of like, if I listen to the rhetoric of people, you'd think we're living in the greatest, most free, most abundant time in human history. It's like anyone can get into this financial thing. Mm-hmm. We're all able to do it now. The doors have been broken open. These financial tricks are at our hands. And so we should all be, you know, living the dream. Everyone's a millionaire. Everyone's becoming rich. And yet, like, it's very obvious, especially in the last 10 years or so, like that the world is becoming crap.
Yeah. Mm-hmm. And what that stat is that you're talking about, of all the equity created from 1989 to 2017, only 25% of the growth in equity was attributable to real economic production. So just a fourth of the growth is accountable to like real, you know, change to the world.
Yeah.
And yeah, I think worth pointing out is probably the greatest objection to, you know, our way of thought and you know, staying out of markets is that, you know, how do we maintain our purchasing power with inflation? And I think, you know, it's worth saying that with speculation and increasing our capital assets or monetary assets and without creation, that's what causes inflation.
Yeah.
Because you have more money and no goods to spend it on. So
right.
the greatest counter to that is to create actual goods to offset that increase in monetary value.
Right.
And so that is the only way to stop inflation.
Right. So insofar as we're all just scared and operate out of that fear and say, well, I don't want my cash to lose value, so I'm going to invest in the stock market.
Right. So
we're
you're just adding
we're creating the problem.
Right.
Which is that there's no jobs.
Exactly.
Or less jobs.
Or no goods, yeah.
Yeah, and less production.
Yeah.
Or the jobs are stupid. You know, they're the jobs that are not actually attributing to the production of real goods. Now, I mean, as Will pointed out, that 25% actually does include the administering services, which is crazy. But even we talk about a lot of the services that we are providing today, for quite a number of reasons, they do not contribute to the lowering of prices.
Yeah.
Because they're superfluous.
Well, the biggest industry is finance, right, and real estate. So, it's the middlemen who are effectuating these transactions of speculation.
Oh my gosh, this is horrible. This is horrible. So, like, part of the real economic growth that we're talking about is stockbrokers?
Yeah.
Oh, no. It's worse than I thought. I thought we were lumping that under fake things.
No, that's part of the real.
Yeah, because they're earning wages.
Right, they're earning wages, of course. Oh, that's terrible. That's like that.
And finance and real estate's either the biggest or the second largest industry.
I mean, I believe it. I believe it on the basis of the number of people that hear about what New Polity has to say and then say, as a stockbroker, I'll tell you, this is all wrong.
We tried to come up with an analogy for, not as a stockbroker, because a lot of them will actually admit that we're right. It's more the financial advisors. Yeah. Well, you had a good analogy for financial advisors.
Well, you thought it was a pharmacist, right?
I was trying to think. It's like, is that a good description as a pharmacist? Because they're not the ones that like produce the medicine, They're like or like even diagnose you. They just kind of get it off the shelf and go grab it.
Yeah, but
Will thought I was wrong.
Yeah.
No, I mean that might. I don't know. I was thinking about.
I was thinking my father-in-law is a pharmacist, so I have to defend him. There's not a middleman. They do the actual chemical compounding and mixing of the drug. So it's
okay. So I have no idea what I'm talking about then. Yeah.
It is mediating, but there's like content to the mediation.
Okay, cool.
Okay. Well, I mean, a financial advisor is mediating, and there's content to that mediation as well, because they are providing you with dumbed down information of what to invest in. So I guess that is analogous in a way.
I did it like when I was in high school. I did like some weird internship with a financial advisor guy, and at one point he's like showing me all like the differences that everybody knows about is like small cap, large, international, whatever, domestic, whatever. And I say, okay, yeah, but like, how do you choose, like what are in the mutual funds that you're selling people, or that you're administering for people? And he goes, oh, I have no idea. Mm-hmm. I go, what? That seemed like the fun part, and I, and a lot of financial advisors they'll just be mad about this in general. They're already mad at us. But, I think that is kind of important to say is that they provide a real service to people insofar as they really cull anxiety. I think, I've seen this up close. They say, like, look, you're worried about your future. We can come up with a plan for you,
Yeah, and they sell you security. It's wild how normal it is. Like, I got a piece of junk mail that was like, have you planned for your... it was selling life insurance for grandparents so that when they die, their kids can get some money. And it was all like, you plan to die yet? Don't let that go unwasted. That's a benefit. Get in on this right now. Your kids could really, have some money for college on the basis of your death. And it's just like, we're just mailing these things to each other. We're just like... it's like the production, the reason. I mean, we've already discussed this before, right? That stock markets, another reason that they're kind of parasitic on the good is they feel like investments precisely because they're what we can do with superfluous wealth, right? Like you can't really invest in stocks if you need the money right now for your vacation and your family. So it's the use of superfluous wealth only. The difference being that unlike what Christianity has always taught, namely that all of our superfluous wealth belongs by justice to the poor, stock market says, oh, that superfluous wealth belongs to you to make more superfluous wealth.
Right.
Yeah.
And this is why people use the inflation argument, is because they know somewhere deep down in their conscience that they can't make the argument they want to make, which is this will make me richer.
Right.
So they have to say that.
That's true. So, but I mean, I do know a lot of people who are legitimately worried about retirement and stuff.
Sure.
But this is the thing that it's kind of hard to say in some ways, but it's just not the only option. And in fact, it's a very new option. I mean, really, the tax code 401k was developed in 1978, and didn't really become popular until the 80s. Yeah. Under a guy named Ted Bennett who figured out how to do all of it. It's like, really? Like, you think that something that was created in 1980 is like going to save you at the end of your life?
Yeah,
Like,
yeah.
what did people do before? And Ten Bena was asked that once. Like, I don't know how any of us lived prior to this. And he laughed at the interviewer and he said, nobody worried about retirement before.
Yeah.
Like, the best thing that I've created, he says that he wants to blow the whole system up. You know, he hates 401ks and for many reasons, but a big part of it, one of his main arguments is that the financial sector is just preying upon good-meaning people. It's the same argument that the Catechism makes.
Yeah.
That they're just warning against people who are being subjected
Yeah.
to people who are better than them at trading and don't realize that even though their numbers are going up, that their freedom is going down. And he says, you know, nobody worried about it prior because everybody has families, but we don't have families now as we had families then, you know? He actually said that at the time he wanted to get out of accounting because it was so corrupt, and his entire job all the time was working for corporations that were trying to lower the incomes of their employees, you know, and that's what they had tasked him with doing when he found a 401k. And he said, all right, here's a way, like you're not going to get taxed, Mr. Corporation, for this money that you're going to give to your employees here. They don't get it now. They can't use it for a long time. So they're not going to like that. Maybe if you did a matching thing, that will make them think that you're like really on their side. But your match is going to be less than what you're taxed. And so you get to save money that way. This is like the whole scheme that he came up with. And he thought, well, maybe this will help because, you know, the corporation's just going to hurt you anyway. You're going to hurt the employee anyway. The employee is going to get some benefit, and he'll be taught how to be a saver instead of just a spender, a frivolous spender. And he thought that was the one, and he still like today thinks that that's the one benefit that helped is that people are now savers. You know, there's things to go. He's not a Catholic guy,
Sure.
clearly, but he says now he does want to blow it up, and he feels just like as if we should link to this article, but he feels as if he's in the same place again as he was then, and that was he could continue his job that he was performing then, or be a Christian, but he could not be both.
Oh, that's right.
Yeah, it's just a different definition of wealth. I mean, our society views a wealthy man as, single, living in a New York City apartment, maybe $10 million in the bank, terrible tastes, no friends, versus, someone maybe here in Steubenville with 12 kids and $100K in the bank, and that person's poor, and the guy in New York City's wealthy.
Yeah.
But it's completely perverse.
Yeah, and they probably have a farm here. Or something.
Yeah, like I'd rather have human beings
Absurdly
as assets.
refined taste.
You're so dainty. Yes.
So what would, it seems like the principal critique of the stock market is really a social critique. You debated Trent Horn on this, where often the question is very much like individual, like, can I do it or not?
Mm-hmm.
But the thing that I'm really enjoying about this conversation is that what we're talking about is has it been good for us as a people, right? And I think that's where it seems obvious that no, it hasn't. It hasn't been good for us as a people. The world is worse. The world is more financial. We have more money, less things, worse work, and we have a lack of real investment because all of that superfluous wealth that otherwise within a Christian mindset would be going to create work, real work, and then profit sharing is now going to stock ownership. And that this kind of ownership is simply not ownership in a meaningful sense, the way we tend to mean ownership. And so the resulting world is a world where people use the word ownership and say, well, I own this company and that company. Well, they don't even say that. I don't even think they really say that. Sometimes they do if they're pressed. But in fact, they don't have any of those qualities of ownership that we would expect from investment, which actually gives you a share in the profits of a particular work, and which implies what John Paul II said. That is to say that through your use of money, you're dignifying the labor of others. Yeah.
Yeah, and I think, a great hero of John Paul II was the Venerable Fulton Sheen.
Yeah, I was looking at this quote.
Are you going to read it to us?
Yes. So this is in response to this argument, right? That, well, with stock markets, we can all own companies. And isn't that great? He says, some representatives of monopolistic
Words.
capitalism, sensing evil in their system, have tried to silence criticism by pointing to the diffused ownership in the great corporations. They advertise, no one owns more than 4% of the stock in this great company. Or they print lists of stockholders, showing that these include farmers, school teachers, baseball players, taxi drivers, and even babies. But there's a catch to this argument, and it is this. Although it is true that individuals of small means own shares in the company, it is not true that they run the company. Their responsibility for its policies is nil. Possession properly has two faces, two aspects. We all have a right to private property, but this is accompanied by our responsibility for its righteous use. Everyone admits that the farmer who owns a horse is obligated to feed and care for it, but in the case of stocks and bonds, we often forget that the same principle should prevail. Right? So he says right then and there that like the word ownership is still in play, but the meaning has changed. That center has been stripped out and the exterior remains.
Yeah.
We say we own the company, but that doesn't have any responsibility on our part. Even the kind of responsibility that you could have as a shareholder is limited by the necessity of the shareholders to work for an increased share price.
Mm-hmm.
You know what I mean? Like some people make the most absurd arguments here where they think you can like get on a board of shareholders and just like destroy all the evils of a company and make it good because of your power. It's like only if all the other shareholders agree, and they only ever agree on the basis of increased market value, increased stock price, because that's why they own the freaking shares. So this fantasy world where it's just like generalized power, like I'm going to go sit on the board and say, hey, you know what? I think we should promote the Catholic Church in every city in America. That's what we should be doing as a company, and I'm a shareholder, and you ought to listen to me. Yeah, sure. If that produces increased market value, everyone else is going to vote yay. But that is the point, is that the company has been spiritually devoid of any particular meaning outside of the ability to sell stocks to other people. Mm-hmm. So at that point, like, yeah, if the faith can serve that, if goodness can serve market value, if virtue can serve market value, if family values can serve market value, well, then yeah, let's do it. But the point is these have all been prostituted. They're just for money. That's what they're for. And so you don't get to make this ridiculous argument. And it's not just ridiculous logically, it's ridiculous practically. No one does this, right? Like there are no people now. Maybe there's one person, maybe two.
Elon
people.
Musk. Is that what you're thinking?
Yeah. I was thinking of like people who are very rich and so have this capacity. But if you're talking about like where we're having the argument, which is among Christians, if you think that there's some kind of like Christian revolution possible through the taking over of through the taking over of board of directors positions, you're insane and you're lying to yourself. You want money and you want security. That's what you want. You are not going you are never becoming a board member, and if you do, you're never going to get around the logic of increased market value as the very raison d'etre of your position.
Exactly. Yeah.
Like I'm sorry. I realize that.
Keep going.
No, I'm just yelling at people who aren't necessarily the ones listening. some poor guys out there like.
But they're gonna feel like they're never gonna do this again.
Like, oh, I'm sorry.
What did I do?
Is he talking to me? No, I just get worked up because like I'm just so sick of it's not even being wrong. Of course we can be wrong and we can be sinful, but like the lying.
Yeah.
The like saying that stocks are in the stock market is about something that everyone knows it's not. Like it's not about ownership of companies. It's not about like changing the world for the better. It's just not about those things, and we know that. It's just we say this because our consciences are. I mean, it's great that we say it because it shows how afflicted our consciences really are about this form of ownership.
Yeah, but as we often say, you know, the form really reveals the purpose of whatever you're doing. So when in the case of, or the origins reveal the purpose of why it created. In both of these in both cases, whether you're looking at the form or the origins, it really reveals that the point of the secondary market, buying and selling of stocks to other people, was created for an increase in money.
Yeah.
That's it.
And it has succeeded.
And it has.
Yeah, and one of the most fundamental aspects of the societas was that it had a terminus, right? Mm-hmm. And so then you could actually say, okay, my investment is for some end, some good. Mm-hmm. But without a terminus now, I don't know how anyone can justify that their investment is for some common good. Like, okay, if I take my money out in August versus October, I'm benefiting the common good that way. Like, how?
That's a great
What does that have
point.
to do?
Yeah, because we use the word "end" to mean purpose for a reason.
Right.
You know, it shows when we've hit our mark. There's no mark to be hit.
No.
You know.
That's so smart. I hadn't thought about that. And you know, it's this other thing that stock ownership is like this. It morally compromises the soul, because when you own, you might have this insane idea that you're like directly benefiting the company, and we forgive you for it. I had it too. You have that idea, but then you run into the problem you just mentioned, which is that, well, if the company is detached from any particular purpose on the basis of it going public, then whatever it does is what it does. And so then you say, okay, well, I'm going to be a really conscientious investor because for some reason this hasn't inspired you just to like move to Steubenville. And so you say, oh, I'm going to be really conscientious. I'm going to watch all these companies, make sure, you know. But it's like, yeah, okay, so say you're invested in Amazon and you're like, they're just great. Oh, no, they're using child slaves. I'm out. How do you get out? By selling the stock to somebody else. That's what divestment means. Divestment doesn't mean you like morally reprimand the company that you're involved in. It means that you get somebody into your morally compromised position. Like, the only way to get out of the stocks is to trick other people into doing them, unless you're going to go to the company itself and say, please annihilate my stock, which I hear you can do, ? There's some kind of like thing sometimes where you
Annihilate it?
Not annihilate it, sorry. It's a little too, even that they are not, even God isn't so powerful.
Or?
No, like there's some way to like, is there ever any way to cash out a stock besides selling it to another shareholder?
I'm not aware there may be. I'm not sure.
Maybe there's.
I kind of doubt it.
Certainly it's,
but
certainly
even
no one does it.
even divesting, I mean, you're still, because what props up the share price is the transactions, right? Yeah. And so by participating in a selling of the share, you are propping up the share price even more.
Right. So if
you're agreeing to sell it for, hypothetically, if it's growing, for more than you purchased it for. So
so
your liquidation is helping the company's value.
It is literally impossible to get out of the stock market and have the effect of your getting out be some kind of moral
punishment.
Disapproval of the company.
Yeah, it is kind of interesting. Just as kind of another side to look at the form of the stock market is that the only way in which you can actually reap the benefits of your speculation, of your investment, so-called investment, is by giving up ownership, or the light claim of ownership that you have of the stock. Whereas the 19th century capitalists could go over to the factory that he had, point at it, and say, "That's mine." You can't really point at anything, for a publicly traded company in the same way. You can't point at a stock and say, "That's mine," and especially you can't really reap the benefits of that thing either, because it's not a physical entity in the same way.
I mean, think of modern corporations with businesses in so many different countries. I mean, all these different products they're selling. You have no idea what you're actually buying, or what even makes you like the company in the first place. You have no idea what that is.
Right, and this is another one of those lies that I think we tell ourselves, which is that we want to invest in companies that we like. It's like you just need to put an asterisk and just say, insofar as what you really want, which is a return on your investment, applies. Right. And then those are the companies of which you choose which ones you like. Right. So let's just be honest. What we want is a return. Mm-hmm. You know what I mean? And this puts the Christian, I think, in a tricky position that I don't think he should really get involved in. Because one of the arguments, and I think this is actually a pretty good argument, or at least it's clever. Some people will hear what we're saying, and they'll say, okay, well, it seems like you're trying to make two claims. On the one hand, you're saying that, well, Christians shouldn't participate in these wicked companies by stock investment. On the other hand, you're saying that the stock investment somehow doesn't benefit the company at all. And this seems to be a contradiction, but I hope by now we made it clear. It's like, no. What's happened is that the benefit to the company has been made extrinsic to its actual productive work towards its production of profits and its production of goods and its creation of jobs. Mm-hmm. That has been made extrinsic to it, not unrelated, but extrinsic. So that you're in this really awkward position with stock ownership where, on the one hand, it is true to say in a limited way that you are promoting the company with your buying and selling of its stock, right? But you're not promoting it in such a way that has, as we mentioned, your ownership doesn't have any effect on it in terms of its actual operations. But so you have the ability to essentially, once you buy the stock, only promote the company. So you don't have. Do you see what I'm saying? Like you promote the company precisely as something that benefits from stock ownership.
Right.
So you have enough ownership to say people should like this, people should continue to buy stocks from this, and so you have enough ownership to essentially increase the positive perception of companies. That's what your stock ownership does.
Right. Mm-hmm. And you're benefiting the shareholders.
And you're
the board
benefiting
of
the
directors.
shareholders. Yeah, exactly. So so there is a way in which the argument still holds. It's just that it needs to be really clear.
Yeah, you're almost just applauding their efforts or their initiatives.
Yeah, it's like applause. That's a really good example.
Yeah, like keep doing what you're doing.
Yeah. It's not the case that what we're saying is that you're taking money and giving it to the geniuses over at Alphabet Incorporated and asking them to use that money for a good end. That's not happening. But you are saying, Google baby, Google baby, Google baby, and everyone else around you is saying, oh, yes, Google's good.
Yeah.
So it's both perverse and infantile. Like your ownership is laughable in terms of actually meaning anything, but it's just enough to make you somewhat culpable for the wicked things that these companies do because you're sitting there applauding them. Mm-hmm. So from a moral perspective, you're gaining culpability in terms of the wickedness of the company while losing responsibility that would make you able to change the wickedness of the company. So it's like, I wouldn't touch that with a 10-foot pole.
And you're habituating yourself into greed, so.
Well, right, like individually,
Yeah.
I mean, you're all of your defenses of like good companies versus bad companies is just post facto. You actually did it because you wanted a return, and now you're mad because we're critiquing the stock market, so you're desperately scrambling for some way in which it can be serving the common good, and it can be this sort of moral act of bettering the universe, which is, it's not true. You know it.
Yeah, that's right. Yeah, you know it. And you have, I mean, we could, I guess, sit down and line out all the responses that people could give to this. Like the biggest one I could think of is, well, I did the intellectual work of discovering the company, and work has a reward.
It's not true. That's not true in that way.
Yeah. And things like that. But I think the honest answer is like, well, look, the idea is, are you actively loving your neighbor?
Can we just stop though? Do they really say that? Because it's working for the sake of the production, right? That deserves the reward. It's not just that you did some work.
Yeah.
No, it's like they equate the
that's what I would
expending of energy, like the burning of calories almost.
Okay, so because Wall Street executives do cocaine and stay up all night to make those big trades, they deserve what they get because they've applied labor.
Right. Yeah.
Are you? People don't say that.
Yeah.
I almost don't want to cite like some of the books because they're written by Catholics that say this, you know?
Okay.
But I will if you force me
No.
to.
Oh. So they just think like... So if I'm just there, like, where does that principle stop? Can I just like okay? I work my butt off to have a slave state in Southeast Asia. Is it insofar as I'm laboring, I deserve a reward for my profit? It just happens to be that it's wicked, and that's extrinsic to the fact. Like they just think doing stuff.
Yeah, reaps a reward.
Okay, that's dumb.
But honestly, I think you're right. I mean,
here's another one I've heard. Sorry, before you're trying to be conciliatory at the end here, and I'm too worked up to be conciliatory. They say, I have heard it said, that this thing, this speculative thing. Now let me get this right, because every time I hear it, it's like I lose my mind a little bit, so it makes it hard to repeat. So maybe if I reference it though, you'll know what I'm talking about. They say that this helps societies allocate resources where they're needed. So if I buy stocks in like a shoe company or something, then somehow I'm showing the need for shoes in a given society, which you wouldn't otherwise know apparently, and that then through this knowledge. This is where I get a little confused because it doesn't seem like this would directly affect production, but in I think this fairy tale, resources are then allocated. No, I don't actually understand it.
Oh, so hypothetically, if your investments were directly tied to production, you would only invest where there's opportunity for production to be made, right? So there has to be a demand for those goods that are produced.
Oh, I see. So
there's a demand for shoes. you're going to go invest in a shoe company.
So the investor is like the antenna that like detects opportunity.
Sure.
Because the big dummies just making the shoes, they're just making shoes.
Right.
They're dumb.
But they need your investment to produce them.
Right, but your investment also tells society at large that it is a worthwhile.
Sure.
It's like
Yeah, it's self-reinforcing, I guess.
I see. And I guess there's a certain logic to that. If stocks were the same as investments, there would be a certain logic to that. You only invest where there's opportunity. Although it doesn't really exactly like morally clarify it, because there could be presumably an opportunity for like, contraception, abortion, prostitution, and the same principle would apply. You're just saying that in a amoral universe, this just shows what people desire, I guess. Okay. Right. All right. Yeah, I guess there could be a good there. Like in a functional way.
Absolutely.
If investment was investment, like if it enabled directly the production of things.
Right.
It just doesn't seem to apply to.
No, not today.
The kind of indirect benefit given to companies through stock investment. Okay, thank you. That was clarifying. It really was. No, I hear these things, and I unfortunately am too. I sometimes don't take them as seriously as I should. And then I can't quite articulate the position. I just know it as like a response.
Yeah. I think the thing that the linchpin for me personally was March 2020. Everything crashed. I had divested at this point, which was itself a pretty big move for, just personally speaking. But it was just so tempting. Everything was low. You just know the government's about to pump the economy full of a whole bunch of cash. I didn't know how much at the time, but I knew it was going to be a lot. And just looking around and trying to say, what's a morally illicit company that I could invest in, And, Netflix, nah, I don't want to do that. Amazon, absolutely not. Obviously not. Tesla, nope. Look at all the child labor, all these kids that are dying in the mines. There's just a continual lawsuit going on. And I thought, well, maybe Home Depot. I like wood, I want people to continue to learn how they work with their hands. And I really bemoan the fact that the average age of somebody that knows how to use power tools is 60 years old. So maybe I'll buy some Home Depot stock. But obviously that wasn't being honest with myself either, because the money doesn't go to Home Depot on the one hand, and on the other, if I really loved Home Depot, I would just go and buy more wood from them. I would tell my friends to go and buy them. I would try and appeal to one of the managers at the store in Robinson to found another store in Steubenville, so we didn't just have to go to Lowe's all the time, Right.
Yeah, no, it's a very good point. Like stock, like if you're going to make the argument that it benefits companies, even admitting all of this extrinsicism, it is obviously the case that stock ownership is one of the least direct and beneficial ways, effective ways to benefit a company. Like I have to signify to the population at large through an increased stock price that something is worthwhile. It's like, bro, I can do that easy. I'll just tell you it's worthwhile. Like, and the point is not to just make a joke. The point is to say that if your motivation was what you say it is, that, I just sat down and I wanted to give some companies a boost, and so I bought all these. It's like, no, you didn't. You wanted money, and you're post facto justifying it, right? Because if you really were like, hey, I've got 6 companies that I love, do you know how much more effective you would be just by like standing for them online? That's what they really want you to do, is just to like tweet about it.
Right.
And that is going to be way more effective. In fact, that directly achieves what stocks indirectly achieve, which is perceived value.
Yeah. But
no one does that.
The companies don't care what you think.
Oh, yeah.
But if you work for an investment bank and you're a research analyst, they do care.
Oh, interesting.
So that's how you employ them.
Wait, say that again? Sorry.
So, some roles on Wall Street are to analyze stocks and just produce research.
I see.
That's just passed around, the investment community for them to read, and they advise on valuation metrics and whatnot, and give their opinion. So that's essentially what you're talking about.
I see. So you're just basically working for Wall Street for free. In my imaginary scenario.
Who's working for Wall Street?
The promoter of the non-stock invested promoter of companies. Maybe I didn't understand your.
No, the guy's making a wage for the bank, right?
I see. Right.
He works at a bank.
Okay.
There's some confusion going on here.
That's all right. Don't worry about it.
But I'm always confused by bankers.
Yeah.
Yeah.
I think that's the point.
Maybe,
Just use.
let's kind of end with this. Mark and I wrote and Will helped a considerable amount with this article that we wrote in issue 3.1
The green one.
of the green one.
All the facts without Mark getting worked up.
Yeah, that's right. And more succinctly put in beautiful footnotes.
Thanks, Ruben.
If you want the argument more in full. But let's just end with this and just remind ourselves what St. Paul said regarding speculation and work. He said this to the Thessalonians. When we were with you, we gave you this rule. If a man will not work, he shall not eat. We hear that some among you are idle. They are busy. They are not busy, They are busy bodies, not doing any work. Now such persons we command and exhort in the Lord Jesus Christ to do their work quietly and to earn their own living. Take note of those who do not obey what we say in this letter. We have nothing to do with them, so that they may be ashamed. It's excommunication. Now, the Greek word that St. Paul utilizes here for busybodies is periergazomai. And I think this is a really important, this is just kind of one of those fun things when Greek really helps, is that dictionaries of ancient Greek, I'm just going to read this part, say this word literally means, quote, to tell others how to buy and sell, end quote, or to bargain, haggle, perites times, end quote. That means over things saleable in the market.
And that just makes sense as a definition, because if St. Paul is talking about people who are not doing any work and are idle and yet presumably eating because they persist, then they must be gaining in some way without work.
Mm-hmm.
And as far as I know, the only way to gain without work is to buy low and sell high.
Yeah. Just use your power as a middleman.
Yeah.
So if people are really kind of struggling with this, fighting against themselves, I mean, this is something that I think we really have to slowly come to. I mean, the fact that I was like sitting there over my computer, ailing over which companies to buy or not buy, and then finally coming to the realization that the only reason I would ever do this is just because I want more money. We got to realize that's just not Christian, you know, and it's slow. And we've been told and catechized into a different teaching, a teaching that is of mammon, not of Christ, that is of this world, not of the heavenly Jerusalem. And we sometimes have to be slow with ourselves, be patient, kind of work through it, struggle through it.
Yeah.
But this is the thing about the Christian tradition. We can't just go off and say, you know, I feel different about it. You know, my intentions are good when I'm doing this. That's not right. And even though we are commanded to listen to our consciences, we are also commanded, even more importantly, to form them properly. And we're not going to get that just by thinking on our own. That comes by docilely receiving the tradition as it has been handed on to us.
Mm-hmm. Yeah, and I think, you know, my fervor, that seems like flattery. My
Your fervor, Mark. I can say
my
it.
sense that thank you. My sense that this is all very ridiculous and obvious is a gift from people like you two, because I didn't have to deal with this as a norm. You know, it didn't come from my family.
Mm-hmm.
I didn't have to deal with this as an anxiety, which is to say that, like, I have been privileged enough not to sit there thinking, like, I'm going to lose all my money. Well, I am privileged also just by disposition. Like, it's not something that, there's many things that tempt me to sin, but, like, not having enough money has just never really been one of them. So I want to couch, like, my fervor and say this is not the kind of I don't think that I'm the kind of sign of what's a necessarily normal experience when you're looking at the stock market. I think it is hard. I think it is slow. But I think what I can be, if anything, is just a sign of how this looked to a people for whom this was not the norm. And this is something that I don't think we really understand in our own tradition, like how angry and upset the poor got about these kinds of techniques and practices. Like how, for instance, you know, Shakespeare could write something like The Merchant of Venice, where usury isn't just like condemned in some theoretical fashion, but it's like he's describing a society in which usury was just obviously, wrong, and like which people's consciences were just alert to and rejecting in different ways.
Yeah.
And again, this is not to say there's some kind of like purity in Christendom where no one was greedy and no one was sinful, but it is to say that there is a state of conscience that comes from receiving the tradition, which I've received from you reading it. There is a kind of clarity of consciousness where this stuff can just become more transparent, and where things just appear to be lies, as opposed to like having to figure things out systematically. And that's one of the calls, I think, to building Christian communities as opposed to monetary communities. That is, communities based not on mutual gain, but communities based on Christ, which is the education of children into the ridiculousness of the stock market. Not into the ridiculousness of the stock market, but to respond to the obvious wickedness of the sin of speculation, especially as a large institution, right? So that the institution no longer hides the sin of speculation, but actually for people whose consciences are well formed, it shows it in all of its monstrosity. It says like, oh yeah, can you imagine if we all did this? Look at this horrible system that would result. I think that is really possible, but I think it requires catechesis, teaching, preaching. It requires an actual awakening of the conscience to this degree. So I think this is to caveat. Yes, it takes a long time. Yes, it's hard work when you're in it, but we should have lots of hope, because when you're not in it, I think it's actually pretty obvious what's to be done.
Yeah, I mean, you just look back at all these medieval sermons. Like people are, like the homilists are constantly calling out against. They didn't use a term there, but speculators and usurers. They're saying these things are evil, these things are bad, and you read it so much, you're like, gosh, these guys were everywhere. But it's actually the very point that they weren't everywhere that they were able to identify it, point it out, and condemn it so easily. When was the last time you heard a sermon about speculation?
Oh, I mean, this very podcast is evidence. Like, we have to talk for, it's been like 2 hours now, to like, okay, let's unravel this situation to show how at the root there's something wrong here. You know what I mean? So, but I think it should just be a sign of hope. Like, we don't have to live this way. We don't have to retire this way. We don't have to get our security through this means. It's not even that good of a means, honestly, if you're going to look at it compared to real estate or land or something like that.
No, and as Will pointed out, that it just makes things worse. It exacerbates our problems.
Increases inflation, yeah. I just learned that, but I'm going to say it confidently for now on.
Do it.
Bro, you speculate? Why are you trying to increase inflation?
Because everyone else is doing it.
Well,
So it must be good.
Will has a big journey ahead of him, because he quit being a banker, became an intern for New Polity for a while, and now you're going off to do a master's education at our dear
JP2.
friend. Yeah,
Our dear friend, John Paul II.
Friend of the JP2 Institute. So we're giving him up to Schindler and Hanby and all the rest, and I'm sure they'll treat you well.
I hope so.
Not
as good as you guys.
Impossible. All right, everyone. Thanks so much for listening to Good Money, and we will see you next time.
Great. See ya.